Okay, very good morning. It is Wednesday the 6th of June. Hope you are well. I'm going to have a kind of look at predominantly the ECB to get things underway. We've just heard on the Squawk the chief economist, Peter Prayat, that's been speaking live at an event this morning and made some hawkish comments. And we're going to look at how the European assets are moving this morning. And it's all about the potential end of QE. So a little bit of movement seen in the euro and the European index futures. We're going to have a look at Trump, his 500-day anniversary as US president. How has he performed? And also, where are we at the moment in the context of China and NAFTA and so on? And then we'll have a bit of a recap on the kind of day ahead and what we're looking out for. So, getting things underway then, let's start with what we're looking at on the charts, which as you can see here is euro dollar seeing some minor outperformance. We're up about 40 pips, we're above R1 already. And what you'll see here is that on the center left, you've got the DAX future, and we initially gapped up in the futures, but we've already closed that gap, as you can see. So if anything, the DAX is trading now in slight negative territory with the euro moving higher. Bunds are also down about 50 ticks this morning. So if you look at those asset class correlations, what this is telling you is that this is a kind of more hawkish turn in markets' belief about ECB policy. So why is this happening? Well, this was a headline that came out late yesterday, so just to kind of recap and go over this. This is looking at the ECB's QE debate next week might lead to policy change. So this is forward-looking now to the upcoming ECB event, and the reason why this is particularly key, and the reason why you're hearing ECB officials commenting live at the moment, is because as of tomorrow, we go into their formal blackout period, so no more comments allowed from those ECB members. So it's their last chance to kind of rephrase markets' views about then preparation of what can be discussed. So this is quite common in terms of central banking kind of tactics, kind of prepping up the scene, if you like, for the meeting. But this is what came out yesterday, and what it was is that ECB policymakers anticipate holding a pivotal discussion at their meeting next week that could conclude, importantly, with a public announcement on when they intend to cease asset purchases, according to euro area officials familiar with the matter. So this is kind of your ECB source, if you like, from Bloomberg. Similar came out from other news wires. So again, we've known the ECB are going to tail off their QE program. What we don't know is the definitive details about when and how they're going to approach that. And so that's the next elevation in terms of a slight hawkish turn. So how has this impacted financial markets? Well, I did mark up the euro yesterday, and so let me just share with you this. This is the euro dollar, or this is the euro future, so looking at euro dollar. And what I marked up here was when those initial comments came out yesterday. So this ECB source was dropped at 5 p.m. And just for any of the newer traders, that's quite I'd say, usual time for ECB source comments that tend to come. The reason for this, as far as kind of the journalists that I speak to, is that they're busy throughout the day trying to accumulate these comments through their contacts, putting together the story, and they want to get it out there as soon as possible before the next journalist at a competing news agency breaks the kind of scoop. And so often they come around cash close, so 4:30, 5 p.m. Same thing happened last night. This was the immediate effect in the euro. So we saw a direct kind of 30 pip spike as soon as that came out. And then actually a few minutes after, Conte in Italy was speaking. And obviously this is important because we're going through the two kind of phases, and we'll have a look at this in a second, about the Senate approval of the kind of new formed coalition government in Italy. And Conte said has no euro exit plan, and so the combination of these kind of two things, the hawkish turn in ECB view, and then coupled with this kind of calming or soothing words about we're not going to pursue this Italia exit kind of mantra, saw euro dollar just continue to move higher over quite a small time frame, probably about half an hour when that move actually materialized. Now just having a look closer toward this morning, so this was really this section of price activity that I was looking at here. I mean, this is a 30-minute now, so this was that initial pop last night or late yesterday evening, or afternoon I should say. And then this is this morning, another little kick in the price action, and that's come after the chief economist, as I said, Pratt of the ECB has been speaking and also saying similar things. Just to recap the comments that he said that, let me just get the comment, remembering that his stance is slightly on the dovish side. He said markets are expecting an end of QE at the end of 2018. This is an observation input that's up for discussion. Adds that it's clear that next week we need to discuss the end of QE. Then, ECB hawk, Weidmann, inflation is now expected to gradually return to levels compatible with their target. Market expectations of the end of QE by the end of 2018 is plausible. So again, it's really ramped up the rhetoric, and so consequently we've managed to just have a further extension to the upside. Bigger picture, this was what we were looking at on Monday at the beginning of the week, and we kind of had that bias, if you remember, of potential upside for the pair, just given the dynamic of the trade situation, which potentially could have played out negatively for the dollar. This comparative to the what is, at least for the time being, relative calm over the European political situation. So that is coming to fruition, and we've managed to take out then that previous high that was seen in that afternoon of the 24th of May. And so next kind of target here upside, we'll be looking at that 1791 from this kind of broader perspective, and that 118 handle just on the top side. I think that definitely is in sight for today's session, just given the fact that the ECB seemed to have made quite a concerted effort quite late in the game into the blackout period. So all things being equal, I'd look for the euro-dollar pair potentially might have some legs to the upside as the session progresses, just given the context of the news just discussed. A few other things to cover off then from a news point of view, and we talked about Italy, so let me just give you the latest with that. And what's happened here is Conte wins confidence vote in the Senate, now faces lower house ballot. Now this is interesting, and this also I think fits into not so much an intraday, but what I feel is a situation that certainly is going to return in due course. And this is because the Italian Prime Minister Giuseppe Conte passed the first parliamentary hurdle, but alarmed markets with a maiden speech pledging a raft of populist measures, from boosting spending on the poor and the jobless to sweeping tax cuts. So it kind of sounds like he's just jumped on board then with the proposals that we had heard from the five-star and the League, which is the whole point that made the market nervous in the first place. Was their proposals are quite, let's say, detrimental, if you like, to the fiscal situation of Italy, which is already in a fairly precarious situation. And so the rating agencies, as we looked at that timeline yesterday, which are going to be upcoming in the weeks and months to come, this could make it, again, quite destabilizing for the kind of foreign view, if you like, on the stability, both politically and economically, in Italy. So although we've got calm at the moment, I certainly do think that this Italian situation is going to rear its head again in the months to come for sure. But that's where we're at the moment. So we've got the lower house ballot happening later today. Reactions to that, I don't think there's going to be too much, to be honest. I think it will go through fine. Another thing that you've probably read about, and we'll kind of look at the situation first before we draw some context in toward market impact. But you might have heard last night that Jeremy Corbyn's made kind of a bit of a change in regards to seeking a soft Brexit. So if you remember, he changed a few months ago to stay in the customs union. Now Labour proposes single market deal. And this is all about timing, as is politics, right? So what's happening is next Tuesday, the kind of flagship Brexit legislation of the Conservative Party under Theresa May is going to be heard in Parliament on Tuesday. So this comes ahead of that. Now, a couple of the key things here. So UK's main opposition party has proposed a plan to effectively stay in the European Union single market. A move that obviously market commentators are saying could nudge the country towards keeping closer to the bloc after Brexit. This becomes then an amendment to the existing proposal from May, which is what's going to be heard next Tuesday, as I said. Now, important thing here, Labour cannot pass laws on its own. It does need members of May's governing Tory party, just given the split, the dynamic currently in the lower house. And so Tory party who favour a softer version of Brexit, so any members of that, would need to rebel against, obviously, Theresa May and vote with the opposition. So in reality, you're talking about not just, people within the pro-Remain, if you like, of the Conservative Party going against Theresa May. You're now asking them to not only do that, but go one step further and back Jeremy Corbyn. I think that's unlikely. I think where this heads then is that what this does is it changes the direction of the conversation slightly, and what might happen then is if Theresa May gets defeated, then the Tory party needs to bring about a new kind of view, if you like. If she does get defeated next week, certainly this does bring back, certainly to the fold, heightened political risk about potential votes of no confidence in Theresa May's ability to handle the Brexit situation. And so although Brexit has taken a backseat, given Italy, given this week trade and the G7 summit at the end of the week, it's certainly going to come back next week. So keep your eyes peeled. That being said, though, I don't think this story is going to have any market impact on the pound. I think that's already evident this morning with cable kind of just trading up in relation to the slightly weaker dollar with some of the moves that are going on. So euro dollar and cable on the front foot. And again, this isn't, I don't think, Jeremy Corbyn odds going up of him becoming Prime Minister. I think all this does is change the narrative slightly, that potentially then a new proposal might need to be rewritten by the Tory party, and it's again, it goes down the path of a softer Brexit, which, if anything, the more likely that becomes, the more pound friendly that scenario is. So that's kind of how I'd view that situation. Okay, a few other things to have a look at. Just a statistical point of view, I thought this was quite interesting. Let me see if I can just quickly switch my chart so I can make my video camera a bit smaller. So hopefully you can see the numbers now. But this I saw on my way into work, and this was obviously Trump was celebrating yesterday his 500 days in office. So obviously he's blowing his own trumpet about what a great job he's done, record low unemployment, all these types of things. But here's Trump down on the bottom. Now I have noticed that there is a typo here that this research firm has done. This should be 2000. So not 19, so it should be 2018, 2010, 2002. The point being here, Donald Trump, first 500 days, the return and change in the Dow Jones, 25%. But if you look, exactly the same almost as what Barack Obama achieved in his first 500 days. But if I remember rightly, between winning the presidency and the inauguration of when Obama came in, I think the S&P, or the Dow, sorry, fell something like 30%. So, Obama, this isn't Obama, what a great guy. This is Obama supplemented by one of the most drastic monetary policy responses, the US economy's ever seen, with the slashing of interest rates and so on that occurred immediately amidst the financial crisis. So Trump, 25%, where does that put him in the grander scheme of things? Well, the last president to be that influential in a purely stock market return point of view, George H.W. Bush, 31%. But check out Roosevelt, way up there, first 500 days, 80%. So if I was going to give Trump a grade, I'm going to give him a B. Pretty good return, could do better. Speaking of Trump, let's bring it back forward and more related to where we are at the moment. And obviously trade is a key topic for this week ahead of the G7 at the weekend, as we know. So one thing here is China continue to kind of try to manage the situation as to not escalate. This is interesting. Is Trump and his approach to these negotiations, which is incredibly hard, kind of heavy-handed comparative to previous politicians gone by, but is it paying dividends? Because as the US and China continue to haggle over the shape of a deal to fend off an impending trade war, China offering a boost of purchases of American goods, and the US finalizing a deal to allow China's ZTE Corp to resume purchases from American suppliers. So China said to offer to buy $25 billion more in US goods. That's a pretty good way, right, to make a situation go away if you've got the luxury of some ammunition. How's 25 billion to just solve a problem? So what's interesting here, though, as I said, is that China are not retaliating. Point one, this is important for global market sentiment, because if they did retaliate, that's a huge negative consequence globally, and that's not occurring. They continue to be fairly diplomatic, and Trump is continuing to receive concessions. So the question mark here is, at what point does Trump stop and say, actually, I've achieved quite a bit here, and politically, I'm going to get a lot of support of my main kind of staple of core voters in America, because look what I've done with China, look what I've got for our country? Or does he take this as just, well, if I got this far, let's see how far I can push the envelope? Yeah, that's kind of where we are, I think, at the moment with this situation. So still definitely to be monitored, and obviously more of this to come, I'm sure, as we go into the G7 kicking off on Friday. One other thing that you may have seen me tweet last night, and talking of Trump, we've got to talk about North Korea. That's definitely not gone away. And ahead of the meeting with North Korea, I did see the New York Post released an article saying that guess who's going to be the mediator of that meeting between Donald Trump and Kim Jong-un? You guessed it. The worm, Dennis Rodman, is apparently going to chair the meeting between Donald Trump and Kim Jong-un. You just can't make this stuff up. What I thought was really interesting, though, is that for those of you who know your US TV shows, Dennis Rodman actually appeared on The Apprentice in the US back in 2014. He didn't last very long. Trump didn't like him, and Trump fired him. And Trump, this was a genuine Trump tweet that he made back in 2014. He said, Dennis Rodman was either drunk or on drugs, delusional, when he said I wanted to go to North Korea with him. I'm so glad I fired him on The Apprentice. This was 2014, and here we are. It looks like Rodman's back in the fold, and he's going to be the chief mediator of this groundbreaking meeting between the US and North Korea. So, yeah, we think we can forecast a future. I would never have imagined that. All right. Talking of a few other things, and actually just quickly when we're finishing off our kind of recap on Trump, this is the Mexican peso. Mexican peso took a dive yesterday. It briefly hit a 15-month low. Hopes dimmed over the prospects of a new NAFTA agreement following a sharp escalation in the tit-for-tat trade war. This coming about separate sideline bilateral talks in which Trump was inferring. And so, yeah, the peso and the CAD still remain hypersensitive, I would say, to any NAFTA updates. And definitely this does form part of this kind of discussion points of key things to look out for with Trump. So there's trade, predominantly with China and the EU, but then there's NAFTA with Canada, so peso and loonie response in the FX market, and then there's North Korea for the kind of all global sentiment on the foreign situation. So three major points to be aware of with Trump, and obviously these are all kind of escalating to some degree ahead of the G7, where all of these things will be discussed, I'm sure. Few other things to look at. Overnight, you did have Aussie GDP. I know quite a few of you guys were looking at the Aussie yesterday, but the Australian GDP figure actually exceeded expectations overnight and did prompt a bit of a rally in the price of the local currency. Not only that, some of the basic resource names in Australia and the ASX were also supported by the fact that you may have seen yesterday, copper has risen above 7,000 a tonne. Why has this happened? Well, predominantly it's based on the back of the Escondida mine in Chile. Could be hit by further industrial unrest. Now, why is Escondida mine particularly important? Well, it employs roughly about 2,500 or 3,500 workers. They often have wage disputes, which is very direct correlation to the influence on the price of copper, because this one mine alone accounts for 5% of the entire supply of copper in the world. So certainly copper and its relation to the Aussie can also be meaningful, and we did see some of the related stocks take a bit of a benefit overnight in the local Australian market. Quick look at the Aussie though, and technically this was where the GDP came out, so we've had a little bit of a blip in Aussie appreciation, and that's managed for us briefly to retest up at the high that we saw on Monday, but we've got rejected and we've pulled all the way back down. So broader charts though, what's interesting is where the market responded not only to that Monday high, which was 76.67. I was just looking at some longer term trend lines, and what I was looking at here was something from 2017, which kind of encapsulates the low that we printed right at the end of that year. So really, if you're bookmarking the beginning to the end of that year, it kind of each time it acted as a pretty good level, and it's just lining up quite nicely as to where we are at the moment. So quite an interesting point here for the Aussie of where do we go next. And so for the dynamic for the Aussie recently, you've had the RBA's been on pat, they're sitting on their hands in terms of interest rate policy, but obviously you've had some Chinese economic data which has been picking up on the manufacturing side, which has been interesting, and obviously that has a close read across into the performance of the Australian economy, or at least prospects of. And so just around where we are here, this sweet spot is a bit make or break of what's the next direction here for the Aussie. Do we pull back and this acts as a strong area of resistance, or is this the kind of the trigger point for the next move higher? It's going to be quite interesting to see how it plays out, but obviously it's had a rejection so far this morning. So maybe that move on the GDP is done for the moment. Quick look at some of the other charts, then we'll look at the day ahead. So let me just have a look at the S&P. We did have another decent hold of gains that have been seen, so going all the way back to the kind of payroll inspired move. So we've gained on payrolls, we had the technology bid, if you like, from the first session of the week. We kind of consolidated and then broke higher again in the Asia Pac session. So as we've kind of said, the market seems to be relatively calm, that Trump aggression in commentary is not going to translate into something more meaningful, which would require a harsh retaliation from those major trading partners. I think what's quite interesting now is that the US equity market feels quite buoyant, and the move though is getting obviously larger as the week goes by. So at what point do we start to see a little bit of profit taking? So then, where would be a good level to look at to potentially then reinitiate a long? Because I do think I have a long bias, but looking at the key technical levels here in close proximity, you've got obviously this kind of point here of action, which would be the high point resistance from yesterday and around the support from initial opening of Asia Pac trade. If we come back down as we are, toward that 52.5, that's kind of the first area of support. But just given the elevation and size of the move, sure, my appetite to look there, but lower down certainly things look quite appetizing for a long. You've got that S1 level, that then kind of lining up with around the consolidation that we had at the beginning of the week and the period thereafter. That could also be quite interesting. You go lower down again, and then you kind of look at the same thing, the previous day's highs, the overnight Asia Pac session, and then it pushes higher again. It's been quite interesting how the S&P's been playing out. It's almost as if the US push it up, they really react, and they're the main catalyst and driver of market direction. Asia kind of comes in, things steady, then it has the next push up with the next US session as it comes in. So I think timing is quite key, and that's a pattern that I think has been quite evident over the course of the last couple of sessions this week for sure. The DAX, obviously you just need to be mindful of the euro appreciation. You might get this kind of monetary play, as I've been talking about, if we get further ECB hawkish rhetoric, where you start to get further gains in the euro, this unwinding of accommodative monetary policy or the debate about it. You might see then the DAX start to come under some pressure, but it looks like it's just seeing a bit of a bounce here more recently. And in fact, we just had a little blip there, back to pivot, just as I was just speaking there. All right, few other things just to round off. Quick look at the calendar for today. So relatively quiet. So certainly I do recommend keeping an eye on the usual themes. So anything pertaining to the trade situation and Trump in particular will be key. Particularly as well, just given around this anniversary of his kind of 500-day marker of his presidency, I think it would be expected that you're going to hear him tweeting probably quite a lot. So as we get towards that 11:30, 11:45, just keep an eye out for things. Going through the session, US trade balance comes out later on this afternoon. You've got the oil inventory numbers coming out as well. Quick look at what happened in the API data last night. And we didn't really have too much of a reaction overall for WTI crude. We had a minor move higher on the initial release, but I guess if anything, it did grind up through the course of the overnight session. But if you put this into a broader perspective, this is the sell-off that we've had materialize over the last week. Obviously, we had reports about potential OPEC meeting agreeing an increase in supply. Now that's kind of been priced in, you're kind of getting a bit of profit taking, I think, on those shorts because the overall narrative hasn't changed. I think oil is a pretty fair price at around where it is at the moment. On that point, we did talk about this yesterday, and I just wanted to quickly share with you, well, this is the chart of oil I was looking at. This is the kind of weekly move, and here we are with a bit of a bounce from that very aggressive sell-off that we had. But Piers was talking with you guys, or certainly the guys internally, in detail about oil and outlook for oil over the period ahead. And we were talking about our outlook for the year-end oil price. Where's it going to be, was the question. And we had quite a diverse kind of cross-section of views. Some people were looking at $50. I think one of the trainees was anticipating $95 at the end of the year, which, as we discussed, could happen. I would say the probability of that, I feel, is probably lower because I think you need to have a supply shock. But that could happen technically. Saudi and Iran, quite a lot of tension building in the Gulf at the moment, which obviously would need to happen in order to inspire quite a catapult higher in prices. But this is what Piers was looking at, and he's looking at 70 at the end of the year. I'm kind of in that camp as well. But interestingly, I did put out a poll on our Twitter account. If you don't follow us on Twitter, please do. We kind of tweet interesting stories day to day. But 206 votes came in. And I asked people, the broader public, what did you think oil prices will be at the end of the year? And I put a range of 50 to 60, 60 to 70, scaling up. And I think this really shows the uncertainty that people have in the marketplace about the future for crude oil, because it's pretty much absolutely even. So from $50 all the way up to an $80 to $100 price band, there's an even amount of people's belief of that occurring. So it does make it a little bit more complex and quite a difficult instrument if you were going to hold positions over a longer term, given that no one's really quite sure of the future direction. So I just thought that was quite interesting. Going back to the calendar though, the speaker slate, you do have Bank of England member speaking at 11 o'clock, and then you've got the kind of uber hawk McCafferty, who is, don't forget, outgoing to be replaced come September. So, you know, is he going to use these kind of last speeches as a means to really put out his view before he departs from the MPC? So you've got Tenreiro at 11, you've got McCafferty coming at 4 p.m. just to be aware of. And then finally, something which isn't so much market sensitive for now, but something that I thought was incredibly interesting for the future, and by the future I mean the months to come, is there's actually going to be a recomposition of what companies qualify for what sectors in specific US indices. Now, this might not sound much on the surface, but if you think about the composition at the moment of the S&P, technology is huge. We talked about yesterday the 5 big tech companies, so Apple, Microsoft, Google, these type of companies. The top 5 now have a value that's bigger than the GDP of Germany. You know, these are huge companies which have a large influence over things like the Nasdaq, for example. However, what's going to happen in the months to come is a sweeping reorganization of the global industry classification standard, which means that funds tracking the telecom, tech, and consumer discretionary sectors could be forced in to trade billions of dollars of stock to realign their holdings by the effective date of this being implemented at the end of September. What's happening is that companies like Facebook and Google's parent Alphabet are going to have to shift from their traditional homes as technology into what will be now telecommunications and media stocks. So as people like Alphabet continue to make their revenue stream more diverse, they become less, if you like, of a purist tech firm and start falling into different catchments. This could then mean quite severe portfolio changes coming forward in the months ahead. I just thought that was quite interesting, and certainly from a prop trading intraday perspective, it might mean then that the influence, the kind of divergences you can get with specific tech-oriented news between, say, the Nasdaq and the S&P or Dow might start to break down in time, and things might become a bit more of an even playing field. All right, that's it. Spoken enough. Going to let you guys get on. Any questions? I'll be in the chat room, so have yourself a good day, and thank you very much.